Well, hello, folks and crypto people. I got a good one for you today. Yours truly has to start by eating a pie in the face, because I really did not expect the CPI report to come out at below 9. I guess I had gotten extremely bearish in my sentiment. And even though 8.5 is still amazingly horrible, people are going homeless and starving and don't know where the next meal is coming from. This is, of course, enough for degenerate gamblers, not just in crypto, but in asset classes all over the board. Risk on just got another leg on top of what has been the bear market rally. So I really thought when the CPI report came out, it was going to be a bad stopgap, and we might even have to be hesitant of the Fed coming out and saying, let's have an emergency August meeting. So now all the pain is set off till September. And even the PPI coming out today did not spook the markets. The dollar is continuing to drop. But gold seems to be holding. Like, I don't believe the dollar. So there's a actual argument happening in the market now. If you look at stocks, they say risk on, the rally's good. But if you look at bonds, they say believe the Fed, the market's lying. But the market says the Fed is lying. Do you believe bonds? Do you believe the market? I like to have hope and deliver some hopium, but I also like to have a realistic expectation of what might happen. So, why don't we have another look at charts, since we've got all sorts of interesting things going on with the SEC coming out of the woodwork and going after people. So in this rally, all this mania, I was tracking the NASDAQ, and I believed the trend is your friend until the end. And I knew this downward trend had been broken, so this line here becomes completely irrelevant. And this line does stay because it should act as a line of support if it comes back down. So within the trend, I had expected it, and it did pull back. But as soon as the CPI came out, risk on. But all right, I didn't think that that would have that much energy to this rally, because fundamentally, the higher this rally goes, the worse inflation gets. And I'll explain that even the best I can. Just basically, all this asset price going up actually means there's more liquidity available for businesses and for spending and for inflation, and this means the Fed has more room and more necessity to raise hikes in September. So the SPX 500 index of the 500 companies in the S&P, the S&P 500, all right? So this one is still within the trend limits. 4,200. Yeah, we just broke over 4,200. Oh, 4,200. I didn't even have that marked on. Oh, wait, I did. No. 4,200 was a critical support, which it's peaked over. I need to remark these lines. Basically, that needs to come up to like there. But it peaked over this, and as we head up to close 4,300, there's still the top of this trend as major resistance. And this index of 500 companies gives you an idea of the pulse of the entire market, money coming in and out, not just one company at a time. It's funny, though, that these NASDAQ and the SPX tend to follow Apple. So Apple's been trading hard, and even if it stalls out and consolidates up here and loses this trend line for support, it still has the initial spike off trend to consolidate within. But I do believe that fundamentally Mr. Burr is right, Mr. Burry, and shorting Apple might be a good idea, although he did it down here. But he generally sees something that we don't see, and he is shorting Apple. And so this does seem like an excellent capability time. If you believe the market is going down, if you believe in the bears, the fundamentals, why is all this stock going up? Is their revenue shooting up? No. They had any new huge business? No. Fundamentally, the whole market was agitated in huge oversold conditions, getting a crap kicking pretty much all year. Sorry, there was a rally back here, but it has been a mean year for the markets, losing value. And as Mr. Burry would point out, during the 2000 crash, which indicators are starting to point towards, the SPX and NASDAQ rallied 7 times before they actually found a bottom. So eventually this rally will run out of steam because inflation is still running hard and the Fed is not about to pivot. The bulls are going, yeah, the Fed's going to pivot. They're going to cut rates. That is so dead wrong. That's the mania. The mania is here, and even some of the bears are starting to change their attitude. And this is where the tops start to come in. And finally everyone's like, yeah, all-time new highs, smacked pie in the face. Once you've got everyone in and they're actually trapped. And look at Apple go. So, I mean, will Apple, who's been a big leader of the NASDAQ and SPX, I believe, will they call back at their trend line? Will the SPX go all the way its trend? When I originally said I was very bearish, and I said the NASDAQ with the hardest down slope would be the cap, and all the others would follow. But it's peaked through, so who's the cap? Where's the glass ceiling? Is it the SPX? Is it the whole market? Is it Apple leading the charge, the risk-on sentiment? Does it all come down to Apple failing? Is Tesla the one pulling the steam out of this rally because, oh, where Elon crapped on your head, otherwise it would be approaching this trend line? Because he's selling billions and billions of dollars of shares because he turned Tesla into a meme stock trading well above its valuations. Fundamentally, it has no excuse being at this price. It is 10 times overvalued at this price, actually more than that. This should be valuated at $70 maybe a share. This has been mania trading above. So manias came, they go. And crypto style mania came to the markets, in my opinion, if we zoom out and actually look how Tesla pumped. If you want to see this, let's have a look at the week. Okay. Whoa. Alright. 2021. So when the Fed just went into nuts printing money and everyone had the room to invest, now they're sucking the liquidity back out of the market. When we look on the macro, these downtrends, they are not pretty. And right now, yeah, that on the downtrend should have still had room to get higher as the things futtered out, but billions of dollars worth of shares being rained on by Elon Musk, who said he wouldn't sell anymore. Such a trustworthy guy. He's not the worst ever. I'm not going to get political here. Elon Musk, hey, some people like him, some people don't. I think he has good moments and bad moments. So, I've never met him personally. I don't really have a strong opinion one way or the other. I think he can do some good things and some crappy things, like most people can. So, all in all, I'm not a culty. I'm also not completely against it. However, since the Twitter fiasco, he's getting backed further and further into a corner with more bad press and more scandals. Oof. Yeah, this is me looking back at Apple. And again, we do see, though, that Apple have been fighting long-term growth trends. It may have been overpumped by the excess liquidity, but all in all, if it is overvalued, it's not as much, because also it should maybe come down to $90 a share or $80 a share back down here. Not anywhere the kind of crash we're looking at Tesla. So even shorting Apple, if the fundamentals are right, this is basically why the fundamentals say the valuation should come back down. At a lot of these excess gains of the money printed during the thing where we all stayed very nice in our homes, yeah, a lot of that could potentially be lost very quickly. So I am still fundamentally a bear. Now, how to prepare in things like this? Well, maybe you don't have, like myself, I don't have a whole heap ton of liquidity to leverage and short things. So there are calls and puts, which I don't know how to actually place. I know how to time, and I'm trying to learn a little bit of the formulas, but I don't have a lot of spare time because I work. I have to work pretty hard, try and keep bills up with inflation, because I do not want to cash out my assets just so I don't starve to death. So I don't have a lot of time to do these videos. However, yeah, I thought that the NASDAQ would lead the charge, so I thought, kablooey, that's the end of it. But Apple, or even the SPX, somewhere the wake up is going to happen, and the glass ceiling, when it hits resistance, is going to take the final oomph of steam out of the rally. Because the rally has been, look at how oversold Apple is. Like, this is, or overbought it is on the RSI over the daily. This is excessive. Excessive. This will not continue. It will drop out. This is mania up here. Normally, at any point throughout the years, even on the daily, if you want, we can have a look at the weekly across a couple years. So we have extreme oversought. In the weekly, it's not as agitated. You can see like extremely overbought conditions have occurred for long periods, but inflation, again, where's all this money coming from? When people don't have money to buy stuff, including and companies are losing revenue because retail doesn't have money to buy stuff because retail is not that strong. They might be pumping out more money, but they're taking on credit at the racking up credit card debt at the fastest rate ever. And yeah, the bond market, they're inverting, or they're canceling the inversion. So, I mean, the bond market seems to say the Fed is not bluffing. They are not about to pivot, and the stock market just continues with this mania. So there is a ceiling coming. Now, this risk on and risk off affects crypto. Okay, so looking at the Bitcoin charts, I really believe, again, that there could be a suck down. This is where we've got the 11K, the normal correction territory, would bottom out at the double top prior and say, yep, no, that's firm. We're going to continue to slowly trade up and then bull run in a few years. I am worried because of the way that inflation is going nuts, how long the Fed might have to be hawkish and come in with rate hikes, that we may not have seen a quantitative tightening cycle like this in Bitcoin before, and because of that, it may dip down and lose some prior years of gains. I do have a mark all the way down at 3,600. That is a complete red zone. I don't think we'll hit that, but I do believe we will dip under 10,100 and find a bottom somewhere in between these ranges because of that quantitative. This is still too soon to be a bottom, traditionally speaking. Bitcoin loses more, and it's still nowhere near breaking out of its downtrend that has been forming over the long haul period. And Ethereum, yes, looking bullish like it did before. That's the point of the trend. They still haven't broken out of the large end trend. And again, this is the prior gains peak at 500. I believe we could see Ethereum drop below that within this trend even, because this is December 5th where my mouse is hovering. It could happen all the way out to February next year. If this is long-term trending, the weeks, you can actually look at the time it takes for these actions to happen. So if it turns around and suddenly plummets, just like it rode the last plummet line support, which is, again, on my charts, now garbage, it should ride these lines as support. And just like where these intersected before, this will likely be about where the rebound level happens. And this might be the final bottom, if we're lucky. A, B, C, D pattern, like right down, right down, right down is what I'm expecting. I'm very bearish on this long term. There might be just a little more room for growth over the next week or two as the bull trap really sucks in the last bit of liquidity, and bam, markets drop. A lot of sales start happening. The panic comes back as the Fed comes out swinging in September. It's August 11th. And that's a few weeks. And the bottom could drop out Monday. Bottom could drop out tomorrow. Or it could trade for 2 more weeks. I can't see the future. And the tea leaves tell me long term, we're still in for a lot more pain. And that we're nearing the top. I thought we already hit the top, or would hit it with the CPI report, so pie received. Pie received. Like I said, I am not a financial advisor. I do this for entertainment and mostly to help you look and critically think why and how assets are moving. So I always like to point out that we have a dollar index. If the dollar is trading down, gold, commodities, and markets can trade up. And so we look over and gold is finally trading up. Like, okay, we believe you, dollar. We believe you. You know, you might actually be starting to crash because gold won't usually respond until the dollar is crashing. But that could be, the dollar could just be consolidating, having a gentle pullback, and in and around this 8 range could pop back, could consolidate all the way down to here and pop off higher again. And that is where you'll see bonds going up. That's where you see, this could September, September 5th. Maybe we get down here in there in the Fed meeting and boom, the dollar takes off again. It could last for weeks. Could turn around, just the Fed is finally barking the same orders. We have more announcements from the Fed tomorrow, and they are all probably going to be chiming the same tunes, even the bullish ones. The dollar did break its long upstanding trend for now, so we'll see if it can regather steam and follow this trend line. It may have to correct as it's lifted far above it and could still continue to go up as the Fed has to increase. That's how I'm tracking the dollar and US oil. We'll have to zoom in on this one. Look a little closer. Alright, so I had my trend line for oil progression, and the trend is your friend until the end. It fell below it. This is now a line of resistance, so I don't take it away. But now we have this downtrend forming, and the trend is your friend until the end. Are we at the end of this trend? Let's go to the 4-hour even. Are we at the end of this trend? 4-hour might be a little too intensive for us to tell, but we had a false breakout, a little more testing, and we haven't come back down to test the bottom of the trend yet. So I'm not willing to move or make any checks as we've just broken out, but everything is screaming risk on for oil. It will be hitting resistance, I believe, at $95 a barrel, and possibly again at $99 a barrel, which I don't have marked. Somewhere in here is the critical resistance. If it gets above that and pops even higher, we'll see, because as long as oil's pumping, it's an indicator that inflation's intact, demand is intact, and the Fed hasn't done its job. So oil is a pulse line for me, and that's why I should realize with it downtrending so much, we might get a slightly lower CPI reading because people aren't paying as much as the pump. But this pops higher, and suddenly the pump goes, and with food inflation, boom, all of a sudden, inflation has pumped way higher. So I keep a track on these because basically these are the pulse line. Let me know which one of these downtrends may be the actual one that sucks it out. So I should do some chart cleaning because, again, oh, look at Ethereum. It's a mess. I was tracking it, but not like out while I was. I unfortunately didn't have a lot of time, so I was tweeting movements through Ethereum, and I was doing pretty good until here. I really thought at that time, when we had broken this was a new line I formed because of the change, but I really thought it was coming back down to test a little bit lower and get closer to 1300. So I felt, I was a little wrong. There's more oomph in this rally than I realized, because I really thought that that was enough of a rally. But the mania has hit, and I am impressed by the mania, and I will not underestimate it again. Even when it fell under the bull trend that formed back when I was wrong, it has continued to progress up, which is why I did not call the end. But I should say that since it's trading within this wedge, the original wedge, this line is not completely garbage. Where's this? This may be our tap out zone where we get our bull flag. I'll redraw some of this because I have to change my thinking. So this line has really continued to actually matter on an uptrend. So let's get rid of these garbage. That was a very narrow focus trend. Bull flag. Goodbye. Alright. This did not really hold any significance. We popped over that line of resistance. And so overall, we've had a growth since this point. I do see several lines of intersection, but overall, I don't really like it. I like more lines, more points of intersection. So what do we get since that bottom? We still keep falling out, so there's no clear trend line. We keep getting higher lows, but they're less and less higher each time. This is where it's getting harder and harder. Shows the steam falling out. Also, look at the volume. It's all these bars spiking. Yes, trade, yes, trade, yes, trade. The volume's falling out. People are disappearing as we're oversold, and the MACD is definitely coming up near top. This is the steam falling out of the rally. It's getting hard to mark any clear bull trend as they all keep losing some steam. And so overall, we may see a huge correction, and I don't believe that this line holds as much weight on that angle. I do believe, oh crap, I'll have to fix that later. So I do believe, come back to here, we forget about this down point turn. Huh? Maybe not entirely. We've got a not bad fit here. So we'll still assume that we had just a mini breakout. 1, 2, 3 points, riding a bit, fall a little under. Still like the way this hugs this line, telling us that other traders are probably going to be looking at this as the uptrend. When we fall under it, it'll want to start looking to these lines for support, but we'll probably start really losing the steam out of the rally because, boom, this is September, right here. Makes it easier. Like, when does the Fed have their meeting? Let's draw an up and down line. Like, basically the rally has about that much time. Oh, it's funny where this bear trend meets the down resistance where it's got to make a decision. So we might see a pullback into September as it gets clearer and clearer that the Fed's going to come out swinging. It's funny how these trends are lining up with the Fed dates and with the announcements. So yeah, I was wrong about the NASDAQ being the lead indicator. Might be Apple, might be the SPX, not sure, but one of them is going to point out exactly where the top was, because I did find it interesting when BNB went hardy har har. Let's show you long term. When BNB went hardy har har to the downtrend. Yeah, Binance picking up some extra steam there, coming out above. So this will reset new points that they'll have to break in the long-standing downtrend when the bottom's finally in. When will the actual bull rally get clear? It'll be a little bit to tell. I'll have to do some adjustments in my charts. But for now, we're looking for a top that's going to be coming in very soon. So the daily and the 4 hour are going to be what I'm paying attention to. looking for that steam to actually be running out, occasionally taking a peek at the week. So yeah, this is unfortunately market rally. I might myself actually take out some stable coin. I don't have Bitcoin on the Ethereum network. I think I might use LUSD. It's the liquid loan protocol where they're based off liquidity loans. And any time that Ethereum starts crashing, their stablecoin trades up, not down. It gets more solid. And that's the same deal with liquid loans. So it's a decentralized stablecoin made on a programming protocol by a decentralized lending platform on the Ethereum network. Very hard to tamper with. It's not fractionally reserved in the bad way, like, oh, we put out 10 coins, but we only have $5 backing them. No, it's reserved in the other way. Oh, we put out 5 coins, but we got $50 backing those $1 coins. Yeah, heavily loaded in reserve. So it's a very, very good stable coin, which I may use to, hide some assets in. I don't know if BNB has anything similar to liquid loans or liquidity loans from Ethereum or Pulse Chain. So, or Liquidity, sorry, it's just called Liquidity, and the other one is Liquid Loans. Liquid Loans launching on Pulse Chain. Very happy about that. Liquidity has not seemingly performed very well for its investors, but it provides a fundamental, needed, necessary service. I'm glad in the times of uncertainty that I can use a decentralized stablecoin. That makes me happy. That does make me. It makes me very, very happy. Just like watching Top Gun Maverick. I finally got around to watching it. Alright, film review. Awesome. No wonder it's outgrossing Titanic. Ha ha ha! Go Top Gun! Yeah! So, in this, I do always like to talk a little bit about IM, Internet Money. Now, for some reason, my chart lost some lines that I was working with. But right here is roughly an intersect line. The price is almost bouncing off a support line, a crucial point of resistance and support in the IM chart over the last months is literally lose a 0, gain a 0. 7 zeros and a 9, or 6 zeros and a 1. This is a critical support level that it is testing and flirting with. There are not many holders in this. It is priced in BNB, so its price can get dragged along. As BNB goes up, so does it. Now, funny, when it bottomed out, when BNB was at 200, which BNB's only had a 60% increase, this was at, 7 zeros and a 4. And then it skyrocketed all the way up to 6 zeros and 1 4. That's over 300% gains. It grew much more than BNB did since their bottom. So maybe I'm being far too zoomy out. You need to realize just how many zeros and numbers this is crossing. I'm condensing it to show how sexy this thing grows. But this has broken out of its bear trend a long time ago that was set by its all-time high and is continuing to make new lows, higher lows, and higher highs. So there are not many holders in this. This is a little gem trading in the dark. And why would there be so much interest in this little gem in the dark? For the simple reason that they're building a wallet, that they have some plans to maybe take the revenue that they make, like MetaMask makes swap fees, theirs will make swap fees. They're going to make a better wallet, more accurate, easier to use, always with accurate balances. Oh my, wouldn't that be fun? And definitely way more secure than the Solana wallets. Not sharing any information they shouldn't, and adding more cool features. Okay, so, and then they're going to take those profits and share them, possibly with the tokens. How are they going to do that? Well, some of the profits might get paid directly to token holders of WD, which hasn't launched yet. It'll launch when the wallet is ready and out of beta testing. But the IM token, which is getting a free clone on Pulse Chain when it launches, because these creators are going to clone it themselves and get it over onto an honest chain where they don't have to bribe their way into a coin listing site. So getting over to Pulse Chain would be really great, but in the meantime, you can accumulate this dirt cheap, as there are so little holders, so little liquidity. I'm not even saying you got to spend thousands of dollars here. This is one of those, oh yeah, spend what you would on a movie or, night out. Just accumulate a little bit here and there and don't go on the night out. And so they might use some of the revenue to buy and burn it. And if you've seen my other videos on PulseX Math on what buy and burns can do for long-term asset. Now granted, even with large market caps and large amount of coins in the system, there is only a finite number of coins to be sold. And the more that are sold, more often the lower the price is, the more efficient the buy and burn is at destroying those coins and making the supply deflationary. So there is a scarcity with the supply of IM, and I'm very excited about the way that this is built. I am with IM. So yeah, I love talking about this little gem, and I've noticed that, I will say it's true. We have Pulse Hexagon community have talked about projects building, and I don't follow everything from this creator for Pulse D. I'm not even saying I would buy any. I didn't, but there was a free claim, and there was some immediate hatred about scams. So I did something that most people don't do. I did some research. I read the smart contract. I did crappy review on it because it's been a long time since I read code, so I was a little trying to explain it to people, like how do I put this in English. But there was no, all the FUD was just wrecking something that, no, this is an honest contract that was put out on GitHub. They honestly shared it. They didn't hide anything. They've been up in front about the whole project. It's a meme coin. If you're gonna buy a meme coin, what meme coin are you gonna buy? I would never buy a meme coin. But since I had a free claim option that obviously wasn't a scam, I claimed a little bit of Pulse D, and then I have laughed as it has gone up in value. I still would not buy anymore, but I still have not sold it because I am curious to see how high this goes. It's not a scam. All meme coins are scams in the fact that, hey, it's a picture of a dog and it's only going to gain value by more people buying it because they believe it might be the next money of the future. Or they just really like the memes, like buying comic books, but you don't have to buy it to read the memes. Meme coin mentality just goes over my head. I like math, I like fundamentals, but hey, people do seem to buy them, and there doesn't seem to be any hidden tax or any malicious code. It was put in with low liquidity and put with actual funds, and for some reason it has traded upwards at a reasonable pace. There's nothing like insane pump and dump. Oh, maybe it is. There, that's better. No, that's for crypto, a regular healthy 10x kind of grow. There'll probably be a little bit of a correction, another pump, or maybe that was it. All of it, like you see the huge gain and then huge loss. Like, it's interesting how crypto trades. I mean, the mania, the psychology is what I can't put into my math, and so I will be caught sometimes with my drawers down on that one because I like math, I like fundamentals, and fundamentally I don't see any good reason to buy a meme coin. But the creator, is he a scammer? Is he worth being blocked? I don't think so. I mean, it's market fit. Some people want to buy meme coins and don't want to buy anything else. I don't understand it, but so he's built something for Pulse Chain. It's going to be cloned on a Pulse Chain. Like, I'm going to get a free copy. This is on Ethereum right now. And then, if you still holding your coins, it might airdrop you something else. Like, this guy's having some airdrop fun. And, I mean, free money. I didn't know being a hexagon with actual stakes would come with benefits. It really does. Not a lot. It's not like I got airdrop millions and millions. I'm not very rich, but the fact that I got a little something, and if I wanted to sell it, I could buy some more hex right now. But I'm actually interested to see how high this thing can go. Because I'm not sure it's out of steam yet with the mania that's happening right now in the market. And yeah, with its launch time, this has been riding the whole market rally. Market rally is not out of steam yet, so could we see it at $10? I don't know. But when the market pulls back, Paul Steve will see a punch in the face. It will get Paul back. There will be pies in the face. And as I've said about the rest of the market, I think it's close. But the difference is there's not many holders. Like, let's have a look. Holders. Ooh, down just a little bit. 16,000. That's it. That's all the people that hold 6 million Pulse D. Like, alright, they've kind of built it under a small supply. There's no inflation. I don't know if they were talking about deflation with their meme token, making it more scarce. But, I mean, if you're into meme coins, this thing amuses me. I am laughing watching it go up. But as I said, I would put no money into this. And I think the free claim period ended. But I did a video on the contract saying, well, it's safe. You can free claim. And even though it cost a little bit to claim with the Ethereum gas fees, yeah, I discovered the gas fees. So I'm glad I minted. I'm curious to see where it goes. But I am not a proud supporter. But I am saying, get off the guy's back. Don't block the guy. If you don't like him, just say, hey, you know what? I don't agree with you, but the time will tell. I mean, he's not horribly rude. Yeah, I find him a little bit entertaining. Don't know who he really is because, hey, I haven't been here that long. So, and I don't really care about drama and politics that much. For me, it's about the programming. Because, I mean, with culties and with everyone that gets maxis about things, you get very hard opinions. You get very strong, pushy, attitudes that sometimes get their blinders on and don't like to look at the whole picture. So there are some people that don't like me for not having a huge bullish case on Hex. So now I will go back with a little bit of hope as I talk about IM trading above BNB during the rebound, because like I said, Binance, BNB's chart, where was its low when IM hit its low? Oh, 186. So it's maybe pulled a double, and IM did a triple and has done a pullback. Like, IM tends to trade above BNB. I like that for that reason. It's already doing great with so many little holders. But let's look at Hex. I like what Hex is doing, and I've got lines to clean up here too. Okay? So, since it established the two trends of bull, there's always a first bull, like, oh, we've had some good action, and then the mania bull. All right, let's kick into overgear. Now, I had here, you can see, we did struggle with this line. Once it formed here, it became a heavy line of, see, I was looking at it for a trend down or up, but I'm thinking this is a price point that should just be marked and remembered. So I changed this color to green. It does. It's just another line of up and down range. So I said a long time ago when this bottom came in, I said, why do I have the lines I have marked on Hex? And I went, oh, yep, we came down under here. We're going to be trading in this range for a while. And then we have traded in this range for a while. Getting pretty good with this stuff. So within this range, looking much closer, we can see, we will bring this over because I'm not sure which of these lines. We can see there was some more significance at 6 cents. 6 cents was an important part, an important marker for some reason in Hex. I wasn't here back then, but it is, and we're above it. So now this is where I am watching Hex very, very closely. All right, so the way I see it, let's make that one a little larger. We've got our two trends of bull, our current upward one, and the first set one. And we've got our long-term downtrend right here. We are actually so close to the long-standing trend of resistance. Just like the rest of the market, our long-standing bull, because we started to have a breakout just before the market turned really south and dragged us back down. So again, will we have the steam to get past this? We will eventually, but will it be in August? Will we crack over this in August and start trading above and do what Hex has done and trade inverted of the market? When the market does bad, Hex does good. That would be amazing to see the correlation snap and break and go away. But what I'm expecting, because there is some liquidity, not as much, but some liquidity still with ETH, it still does get dragged around by Ethereum's price, especially when volume starts to drop off. Then it's subject to being dragged around by assets it's prepared in for liquidity. Now, as the market corrects and comes out of its rally, I do expect to see at least a correction in Hex, but will it be as severe as everything else? This is where I'm going to be watching, because I found the first bottom. There's going to be a retest of where the real bottom is. It will test the current goal. Is this real? Is this our bottom? Are we still good to go up? I believe it will lose that battle. Then it will test the long-standing one. This is where I get my hope. Now granted, that takes us back to, we might dip all the way down to 4.5 cents again before breaking out in September around that Fed meeting, when the market crashes and everyone goes, you know what? Hex looks delicious, and jumps off and goes pumping up and tries to hide their money in it because they finally treat it like gold. And the dollar starts dropping and gold starts going up. That would be nice to see. That would be really nice to see. And then finally, the third possibility, if it loses this trend as support, means a retest of the double bottom. So I think we will be coming back to this line. And then, where was the double bottom? It was this line. So really, we should make this line very large, very important. It wasn't the double, well, it was like, yep, 1 and 2, just below it she dipped. There was a little double bottom and we went off, but it wasn't enough of a double bottom in my opinion. So I really think that we are definitely coming to test this yellow line, and we may break through depending on how the market psychology is. And if we don't break through, we will come down to again test our 2.9 cents. But once we find that firm bottom, Hex will flood past this and finally start bull cycling ahead of the market, because it hit its bear ahead of the market. I believe it's more of a lead indicator at this point, which is interesting, because it means there's a little bit of psychology about it, and it's a smaller group of investors. It's gate kept. The whole market's not trading in it. Aladdin's not trading in it. If you don't know what Aladdin is, no, it's not the Disney movie. You should be searching such things. I may do a movie or do a video explaining Linux and programming software and AI and Aladdin and BlackRock, all those fun things. But there are other YouTubers. Oh, I wish I could remember her name off the top of my head. Blonde woman, very, very good. Always talking about Pulse Chain. You know what? When I think of it, I'll put it all in that next video, because this one was a little bit about markets and about, you know, how to prepare for such things. Well, puts and calls are short-term trades that lose engaged value over time depending on where it's trading. There's a whole variable of math, like a big long equation, like a quadratic equation. So I like such things, but I'm not going to try and teach you such things. That's gambling. Swing trading gets you wrecked. So then there's longs and shorts, buying into something and leveraging something you own to short something. So I mean, Hey, I can call out opportunities where I wish I had the money to short, but I don't. So I can't even put my money where my mouth is on such things. Even though Bitcoin and Ethereum and Apple are all screaming, I wish I had the money to short. There will be another bottom. There will be a point where the Fed does pivot, but it is not now. It is not now. So this is all mania, all FOMO. Don't be fooled. Don't jump in now. Not saying sell, 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 but just please be careful. There is a freaking quicksand floor under you. You don't realize any moment the floor could just give out on this thing. So I love smaller investments like Hex and IM and Pulse Chain coming. Oh, can't wait for that to come. But I gotta wait. No expectation will work of others. I'm starting to get bitter saying that one. So anyway, that is where my head is at. I have done a long little talk about the markets and shown you some trends that fundamentally inflation's intact. And as market prices and oil and other things go up, the Fed has to crush inflation, which means they have to come out with possibly 100 basis points or 150 basis points. Not 50, not 25, not cutting rates. They still got to come out even harder, but they're probably just going to come to another 75, maybe 100 if we're lucky. They need to be doing this faster. They need to take advantage of these mania and idiots while the market is this high to bring the punishment and pain. If they continue to try for a slow landing, it is going to make things so much worse. This is a lot of mania that actually affords the Fed a great opportunity to punch investors in the face in the stock market and get inflation under control. So beware, buyer beware. All right. Anyways, I hope you found this information useful, and I don't really have a great way to prepare in the market other than, hey guys, just be smart where you're putting your money. Don't spend too much of it. I don't. I make sure my bills are paid. I make sure I have food in the cupboards. And if that means I can't buy any crypto this month, that means I can't buy any crypto this month. That's all it means. So preparing means being financially responsible to me anyway. Because somebody asked me how to prepare. How am I preparing? I'm doing my best to put some cash aside for what I believe will be the real bottom in the stock market. So when that occurs, I won't have put money in already and saw it all get cut in half. I will have accumulated more money and hopefully have a nice, good buying opportunity. That is, again, for a lot of, maybe getting involved in buying some Apple, in buying some other assets that I wouldn't normally handle, in maybe stocking up in some Ethereum. But really, for me, preparing for life, for in general, dollar cost averaging into Hex when I see the bottoms. Time in the market is better than time in the market. But come on, guys. I have not been wrong about calling a bottom since I first bought Hex. So, yeah, I will continue to DCA in on bottoms. But, I'm not aping all my life savings on any particular bottom because it kept making new lows, lower lows. But DCA in all the same. I just don't see why I can't maximize my DCA a little bit. Wait a couple of days or a couple of weeks on a DCA. So if I do have, $20 or $50, I can't buy Hex so easily because of the Ethereum gas fees. So I need larger amounts. So I unfortunately am waiting because I am just that poor. I am though, because it's on BNB, the gas is cents on the dollar. I gotta do a transaction for cents. So yeah, I can actually accumulate small amounts on here if it becomes available. So this is why this is useful to me, someone who's poor heading into a recession, trying to save my money. I'm buying these things as long I set goals. I have a certain amount of funds for long-term investments, and then I'm trying to set aside some funds, do some short ones. And when I have those funds and I spend them, I will tell you people where I'm putting my money, because I cannot tell you what to do with your money. I'm not a financial advisor. All right, Not even a full licensed accountant. It's where I'm a little bit free. I don't have a CPA. I don't have any fiduciary responsibilities. I come on here with my straight opinion about how I'm seeing the market from what I'm learning about the market. It's the best I can do for you folks. So when I have some money to actually put in and do some more trading, I'll tell you. In the meantime, I just love commenting on how sexy the IM chart is and speculating on the future of it, and how sexy the Hex chart is and speculating on the future of it for entertainment. Yeah, I might be good with math. Do I know what I'm talking about? When you've listened to me this long, hit like, hit subscribe, because maybe I know what I'm talking about, but I don't have any credentials, I don't have any certifications, and I can't tell you what to do. I am not the boss of you. So hit like and subscribe. I'm telling you now. Anyways, thanks for tuning in, folks, and watching through all of this rambling. I've had a good off my chest, enjoying my pie in the face, and still screaming, bear. Alright? Buyers, be cautious. Until next time, stay frosty.